of the details, but please stay on because there's some more news coming in as well. The Finance Minister earlier today launched two products to boost corporate bond markets, a backstop fund during times of crisis, as well as a Repo guarantee fund for normal times. Tell us more about that as well.
This backstop or guarantee fund for the corporate debt market has been a long time coming, and it got passed in the budget, the amount sanctioned for it. Basically, it's called the CDMDF, the Corporate Debt Market Development Fund. What happened was, during Lehman and more immediately, during COVID, suddenly there are no buyers for corporate debt. Or if there is an ILNFS moment, mutual funds are holding good paper, but there is no buyers, and suddenly the NAV can really drop if everyone comes and asks for redemption at that point in time, because corporates also need money during such COVID kind of time. So that was when this idea was mooted that you need a buyer of the last resort for corporate bonds in times of financial instability. So this development fund is not operational all the time. Okay, how was it put together? All debt mutual funds have to put in 0.25% of their AUM into this fund. Okay, and as their fund grows, they have to keep putting more money, but the initial contribution is of 0.25. That kitty can be levered up. If you have, say, 4,000 crores or thereabouts, or 5,000 crores, you can take 5 times leverage. Now, why would a bank give leverage to this fund? Because the government has come in and said, we guarantee up to 30,000 crores of this fund. See, the government is not actually giving money. It's giving the guarantee. Now, with that kitty, the fund will be able to buy in times of financial instability. Let's hope those instabilities don't come. But on a normal basis, it will invest in treasuries, government securities, etc., and charge a small fee of 0.15 or thereabouts. That's their charge. That's one scheme that the FM launched today. It's not going to change life now, but it's important as a backstop. The other big product that the FM launched is the LPCC. That is the Limited Purpose Clearing Corp. This is a guarantor of corporate repos. When you sell a corporate bond or when a mutual fund buys it, they don't want it to sit idle. They want to give it as a collateral and borrow money over it. So you keep making more money. Now, that product becomes a problem because nobody is guaranteeing it. Suppose it's a 15-day repo, and in between an ILNFS event happens, or, global yields just surge. Who accounts for that difference? So this fund comes in as a guarantor. Both those important products, the expectation is that with this, there will be more corporate issuances, more people will repo it, and the corporate bond market will take off. That's the hope.
All right. Thanks. Always good to have a safety net for corporate debt. Thanks, Latha, for that. Now, as we slip into a short breather on Business Lunch, an important development and hear out